OMV, the integrated international oil and gas company, would like to present the results of the first 9 months of 2013. Our reported EBIT increased from €2.312 billion to €2.504 billion versus the first 9 months of 2012. The cash flow from operating activities increased from €2.769 billion to €3.689 billion within the same time period. Concerning the operating environment, the average Brent oil price for the first 9 months of 2013 stood at approximately $108 per barrel, which was 3% below the level of the first 9 months of 2012. The refining margins went down by 42%. Clean CCS EBIT also declined, from €2.451 billion to €2.203 billion. This is a 10% decline versus the first 9 months of 2012. Despite this challenging environment, we can present a successful continuation of our profitable growth strategy. Our focus lies strongly on our upstream activities and was recently confirmed by the largest acquisition in the history of OMV, worth $2.65 billion. E&P stakes in the fields Gudrun, Gulfex, Schiehallion and Rosebank are the focus of the deal with the Norwegian company Statoil. The new assets will provide a boost to OMV's strategy and will be a key factor in achieving our 2016 targets. Furthermore, our business segment Exploration and Production has reported average production of 291,000 barrels per day in the first 9 months of 2013. In the Barents Sea, OMV has discovered a large oil field. This discovery, with exciting follow-up potential, will significantly contribute to OMV's long-term organic growth in Northern Europe. OMV acquired a 40% stake in an offshore Madagascar block. In Pakistan, the Sophia 2 exploration well confirmed the discovery of gas and condensate in the Mihar block. News from Gas and Power. The gas-fired power plant in Samsun is in operation. Refining and Marketing achieved strong results, with an 89% increase in EBIT to €730 million compared to the first 9 months of 2012. The performance of petrochemicals saw an increase of 23% against the same period 2012. The refinery utilization rate went up to 91%.
A wonderful good morning from sunny but somehow stormy Vienna to the international and the national press and guests. Today CEO Gerhard Roiss and CFO Davies are presenting the results of the first months of 2013 and are happy to answer your questions. I would like to invite you to make use of the still new format of our results presentation for the media, and you can email us your questions to media.relations@omv.com. We will try to answer as many possible questions as possible right away. Otherwise, we will get back to you through email. And if you're interested to ask questions in German, you're also invited to do so. Sie können auch gerne Fragen auf Deutsch an uns senden. And now I would like to hand over to Mr. Roiss to give us a short glimpse on the results of the first 9 months.
Thank you. We are happy to welcome you today on a day on which we can say that OMV Group has done a good job in a very challenging environment. As you have already seen from the results presented by the companies in our industry, we are facing some constraints. Despite some difficulties in countries like Libya and Yemen, OMV is on track to substantially enhance its upstream portfolio. More on this a bit later. OMV is highly profitable and has the power to generate strong cash flow to finance future growth. Furthermore, we have just completed the largest transaction in OMV's history by taking over assets from Statoil in Norway and in the United Kingdom west of Shetland in a deal worth $2.65 billion. Let me turn to the financial results for the first 9 months. After an excellent start to 2013, we have been able to deliver still higher operating returns. Our reported EBIT for the first 9 months is up 8% to €2.5 billion compared to the same period in 2012. Sales are up 3% to euro 32 billion. We are on track with our strategy and with our business performance, as we can all see on the stock market. Since the beginning of this year, OMV shares are up around 35%. We have substantially outperformed the ATX of the Vienna Stock Exchange, which is up around 8% this year. And we have outperformed the European oil and gas industry by more than 20 percentage points. Furthermore, OMV is still performing much better than the oil price in terms of Brent. In the first 9 months, OMV achieved production of 291,000 barrels per day, which is slightly below the level of 304,000 barrels a day for the first 9 months of 2012, affected by political circumstances. We are still able to generate very strong cash flow from our operations. For the first 9 months, we are up 33% to euros 3.689 billion, and that's a big number. Business segments. Turning to our business segments, let me start with exploration and production. As already mentioned, we further enhanced our upstream portfolio. The acquisition from Statoil for a portfolio of offshore assets will not only keep our experts busy in the weeks and months ahead, it lays the foundation of achieving our key strategic targets for 2016. Delivering production of around 400,000 barrels a day and a 3-year average reserve replacement rate of 100%. And it has also had a positive short-term impact. We have had a production of 25,000 barrels a day from our new assets since 1st of November. In the third quarter, EBIT in exploration and production decreased by 8%, mainly due to lower sales volumes in Libya and Tunisia. We are aware that we are not only operating in easy markets, but this is the key to understanding our strategy of establishing a balanced international portfolio. We have our core countries, Austria and Romania. We have our growth region, the Black Sea and the North Sea. On the other side, we have a long-standing tradition of producing oil and gas in the Middle East. Gas and power still operates in an extremely challenging environment. Results are strongly influenced by oil-linked gas supply and a depressed spot market environment. The performance of the logistics business is impacted by challenging storage markets. In addition, we could not see a lot of positive signals from the power market in the last quarter. But let's be clear, OMV is working on improving the situation with our partners. In our refining and marketing segment, you can see that we are able to deliver excellent results even in demanding markets. Our refinery utilization rate is still very high, 93% in the third quarter and 91% for the first 9 months of this year. We're able to further optimize our filling station network. The contribution from Borealis was strong and increased slightly due to an improved polyolefins business and a solid contribution from Borouge. Let me now turn to the outlook for the rest of 2013 and give some insight into 2014. OMV expects the average Brent oil price to remain above $100 per barrel. In the European gas markets, hub prices increasingly determine the market prices rather than oil-linked gas contracts. Refining margins are expected to remain at historically low levels for the rest of 2013. Demand is still subdued and overcapacity in European markets still persists. CapEx for 2013 is expected to reach a level of around 2.8 billion and will go up to 3.9 billion funded by operating cash flow and planned divestments. Following the acquisition of offshore assets from Statoil, the production level for 2014 is expected to be in the range of 320,000 to 340,000 barrels a day, increasing to approximately 400,000 barrels a day in 2016. OMV is very much looking forward to the future and continuing to prove our ability to deliver. Thank you.
Thank you very much, Mr. Roiss. Dear colleagues from press, thank you very much for the first questions. I would like to start off with questions from Agence France-Presse. Sabrina Guillard would like to know how do you explain that the net income attributable to stockholders fell 27% from Q3 2012 to Q3 2013, while it increased by 18% from 9 months 2012 to 9 months 2013. Mr. Davies?
Well, you can ascribe that to the stronger first two quarters that we had. In particular, the first quarter we had a special gain resulting from the sale of certain strategic inventory reserves, which produced a particularly strong net income. Clearly, that's not something we can repeat every quarter. The quarter three comparison, unfortunately, was more reflective of what actually happened in the quarter. We had a challenging refining margin environment, dramatically lower than the refining margins last year. Our gas business, unfortunately, booked a loss in quarter three. That was also not the case, by the way, in the first half of the year in total. And of course, we had a lower level of production given the difficulties we've had, particularly in Libya and to a lesser degree in Yemen. So the quarter-on-quarter comparison reflects a rather more difficult trading environment than prevailed for the whole 9 months. And as I say, the first 9 months in particular were helped by the very strong first quarter that we had, given this special sale that we did.
Thank you very much. Question from Angelika Gruber from Reuters. What is the current status of the talks with Gazprom? Is there any progress? Can we expect a solution until the end of this year?
Yes, we have been negotiating this issue a couple of months with Gazprom, and we are expecting results, but we cannot comment on any date.
The second question from Reuters is about the current status of the negotiations on the sale of Bayern Oil. Is there still a possibility to get it done by the end of this year?
Again, we're in a negotiation phase, and we will let you know as soon as we have concluded.
And the final question from Libya is quite obvious. It's about the situation in Libya. Is it still interrupted?
Yemen is producing. Libya is still interrupted.
Thank you very much. We have a question from Stuart Elliott from Platts. With other international oil companies starting to abandon projects in Libya, is this something OMV would also consider?
As you know, we're in Libya since 1985, and this is a long-term investment. And we understand the actual situation, but I think in the long run, we believe in the region.
The next question from Platts is going about the refining environment in Europe. Does OMV expect to sell off even more downstream assets?
There are no plans. We stick to our strategy that we've announced in 2011, and that's our guideline.
Bloomberg is asking Alexander Weber. He would like to know, is the Nabucco impairment of 55 million euros the final impact of the project on OMV?
Yes, the write-off was taken in the second quarter, and that to all material extent should be the end of the matter, frankly.
Can you explain the increased contribution by the R&M business segment related to page 5 in the report? At euro 98 million, clean CCS EBIT decreased strongly versus euro 243 million in Q3 12, driven by a significantly lower OMV indicator refining margin and despite an increased contribution of the marketing business.
Yes, as I said, the overall results for the group and this was booked in the R&M division was impacted in the first quarter by the very positive benefit of the sale of the strategic inventory reserves. This, if you actually take it out on a that's an unusual item. We eliminate that when we report our clean results, and our clean results unfortunately reflect a declining position in terms of the refining margins. They have deteriorated quarter on quarter since quarter 3 last year, and that's clearly hurt the performance of the refining business. What's been able to compensate that largely, however, has been an improved performance from our petrochemicals business. When we talk about our refining result, we're talking about the result of the bulk refinery. Our refineries are very strong in terms of petrochemicals as well, and that's actually shown something of an improvement. And what we've also seen is an improvement in the performance of our marketing business as we've reduced the footprint of the business and taken quite some cost out of that business, and that's helped to compensate the reduced refining margin. So the result overall in the refining margin was quite a credible one, particularly given the very difficult refining margin environment.
Can you give some elaborate on how the recent transactions with Statoil will impact the production levels in OMV?
Yes, we have an impact today, as I've mentioned, of 25,000 barrels per day this year. Next year, we expect an increase up to 40,000 barrels per day.
And the final question I get in now from the international friends is what do you think about the development of the oil price? Are we having indications for 2013 and also 2014?
Well, as you know, it depends on the GDP growth global. As we see nowadays, there could be a move upwards. On the other side, it depends on the supply position. We see that depends if Iran will come on stream again. It depends on the output of American production out of tight oil, and therefore I think it should be in the range what we see nowadays.
Thank you very much, gentlemen. As we do not have any further questions, I would like to thank you for your attention. We are happy to follow up with any questions you might have in the course of the day or the next weeks and months and years. Thank you very much and have a nice day. Goodbye.